Hi, this is the business guy with Asset Protection Planner. In today's video, we're going to dive deep into a strategy known as house hacking, what it is and how you can take advantage of these tips I'm about to give you. So you want to learn about house hacking. Maybe you've never heard of it before, but you're curious about how to hack a house. Here's the scoop. House hacking involves buying a property and using it in a way that helps you cover your mortgage. We also update videos, so make sure to subscribe if you haven't already. So imagine you buy a 4-bedroom house, 1, 2, 3, 4, and the mortgage is $2,500 a month. You decide to rent out 3 of the bedrooms. For instance, one of my son's friends who played college basketball at Embry-Riddle did just that. He bought a house, rented out 3 of the rooms for $1,000 each to 3 of his teammates. So with a $2,500 mortgage, he's getting $3,000 a month in rent. So he's covering his mortgage. Plus he's putting $500 a month into his pocket. So every month he's actually making an income. Sure, he shares a bathroom and a kitchen and needs to put on a bathrobe before he walks into the hallway, but his mortgage was totally covered by his tenants and then some. Another approach is buying a duplex. In fact, my son did just that. He actually turned a 6-bedroom house into a duplex with 3 bedrooms on each side by putting up a wall. In fact, the prior owner had already added an additional kitchen. So he lived in one side over here and then he rented out the other side. I think the mortgage that he had on the duplex was $4,000 a month and the tenant paid about $3,000 a month. And he was left paying just $1,000 a month. So this way he benefited from the rental income while minimizing his housing costs. Now, house hacking can also be extended to triplexes and fourplexes. Let's say you buy a 4-plex like this one, you live in one unit and you rent out the other 3. The mortgage on the 4-plex is say $6,000 a month. You charge the 3 tenants $2,000 a month, covering the entire mortgage with your rental income. So this means you essentially live for free. Plus you build equity in the property. Your property is going up in value while your mortgage is going down. And best of all, it's being paid by your tenants. Okay, now let's delve into the financial benefits of house hacking. By having tenants pay your rent, you significantly reduce or eliminate your housing costs, and this allows you to save money, invest in other properties, or use that extra cash for financial goals. Additionally, you benefit from property appreciation over time. As the value of your property increases, your equity grows further, boosting your net worth. So house hacking also offers tax benefits. Mortgage interest, property taxes, and maintenance costs can be deducted from your rental income, reducing your taxable income. Make sure to consult with a tax professional to maximize these benefits and ensure you're taking advantage of all of the available deductions. In fact, we have licensed tax advisors who work with our clients. So if you become a client, we can help you with your taxes as well. And since my company specializes in asset protection from lawsuits, how do you structure this deal to protect yourself? Let's focus on asset protection. Now, when you rent out individual rooms, setting up an LLC for each room may seem clever, but it's impractical. And the reason is the tenant who sues is going to sue the owner of the property. And if that's you, that could be a big liability for you. So what's the solution? Naturally, you want to have insurance to cover potential liabilities, but insurance doesn't cover every liability. Plus, the insurance company is happy to take your money, but when it comes to paying out, they tend to tuck tail and run and come up with excuses as to why they shouldn't have to pay. So a better strategy is to put the property into a single LLC. This way, if something happens and you're sued, the LLC shields your personal assets. Make sure your LLC is treated as a disregarded entity for tax purposes to preserve the capital gains exclusion when you sell the property. Now, for extra protection, consider setting up a leasing company. This is an LLC that you set up and that you own, and this creates another layer between you and your tenants, adding a buffer and potentially offering tax benefits as well. So you can run the rental income through this LLC over here, and that way it can handle the income and expenses. The LLC that owns the property doesn't even necessarily have to have a bank account. Now, there are multiple ways to structure this deal for optimal asset protection. Besides the LLC, you might explore our equity stripping strategy. You can see our equity stripping strategy in another video. What we do is we record a mortgage against the property payable to another LLC. Now, this LLC has a virtual office and nominee manager, and if needed, you can have a third-party lender purchase the mortgage and put the proceeds into your offshore asset protection trust. Now, this approach ensures that if a creditor comes after your property, they won't find it worthwhile to pursue. Now, if you have a mortgage on a property, and you put that property directly into the LLC, in many cases, the lender can call the loan due. This is called the due on sale clause. And since we don't want our clients to worry about the lender accelerating the mortgage because of the transfer, we set up a land trust and we put the property into a land trust. And as long as you're the beneficiary of that mortgage and it's 1 to 4 dwelling units, the bank can't call the loan due. Then on a separate piece of paper called an assignment of beneficial interest, we make the LLC the beneficiary of this land trust. That way you have the privacy of ownership to the land trust and you have the protection the LLC gives you. So what it is, it makes a cubbyhole. So this property is in its own protective structure. So a lawsuit against one property doesn't take everything that you own. Now, another aspect to consider is a property management company. Managing tenants can be time consuming and sometimes stressful. So you need to screen tenants carefully, handle the maintenance issues promptly, and ensure the rent is collected on time. And if you're not up to the task, hiring a property management company can be a wise investment. And they can handle all the day-to-day responsibilities, allowing you to focus on expanding your real estate portfolio or enjoying your free time. Now, my experience with property management companies is that most of them are actually property management companies. So be sure that they are well vetted and they have very good testimonials from happy landlords or properties that they manage. I've had a management company pocket the rent and not pay me. So I'm stuck with the mortgage and the maintenance fees and they pocket all the money. We had another property manager, the property was out of town. So the manager goes in person to collect the rent in cash and they tell me the property is vacant. There are property managers where the tenant complains about water leaks and the manager just lets the problem go until the property is ruined and they get stuck with a huge repair bill. So be sure to hire somebody who follows the golden rule and treats the property the way that they would want it to be treated if it was theirs. Additionally, maintaining good tenant relationships is crucial. Again, follow the golden rule. Just treat them the way you would want to be treated if you're a tenant. Happy tenants are more likely to stay longer, reducing turnover and vacancy rates. So address their concerns promptly, maintain the property well, and create a pleasant living environment. Good communication and respect go a long way in fostering a positive landlord-tenant relationship. Now, when it comes to financing your house hacking venture, there are several options to consider. Traditional mortgages, FHA loans, and VA loans are popular choices. Now, FHA loans in particular are attractive for house hackers because they require a lower down payment and have more lenient credit requirements. However, they do require for you to live in the property for at least a year. Now, VA loans are an excellent option for veterans, offering competitive interest rates and no down payment requirements. Conventional loans are also available, although they typically require a higher down payment and stricter credit criteria. So explore those options and choose the one that best fits your financial situation and long-term goals. Another tip for successful house hacking is to be mindful of local regulations and zoning laws. Some areas have restrictions on short-term rentals, occupancy limits, and other regulations that could impact your house hacking strategy. In fact, one of my son's friends bought a beautiful home in Nashville, Tennessee. He was making money hand over fist with an Airbnb until suddenly the city decided they didn't want to allow short-term rentals in that particular neighborhood. So he was stuck with a huge mortgage payment on a beautiful home, I might add, but he didn't have the income to offset it. So you want to make sure that you're compliant with all local laws to avoid fines and legal issues. So for those interested in scaling their real estate investment portfolio, house hacking is a great starting point. Once you've successfully managed your first property, you can use the equity and cash flow to invest in additional properties. So this creates a snowball effect, allowing you to build a substantial real estate portfolio over time. So in summary, house hacking is a powerful strategy for reducing housing costs, building equity, and generating rental income. So by renting out parts of your property, you can significantly offset your mortgage payments and potentially live for free. Now, properly structuring your deal with LLCs and other asset protection measures can also shield your personal assets from potential losses. So for more detailed information on land trusts, LLCs, offshore trusts, and other asset protection strategies, check out our other videos on my channel. If you have questions, drop them in the comments below. And if you found this video helpful, please like and share it. We do set up all these entities. We do structure asset protection plans. So if you're serious and not just curious, make sure to visit us at assetprotectionplanners.com. You get a lot more free information over there. So thanks for watching. Stay tuned for more tips on asset protection. This is the Business Guy.